to our Sundays watch list. We have a new episode. I have 4 new plays for you this week, and we're about to figure out how to make some more money in these markets. Last week we went 4 for 4 for our plays, went 100%. So if you followed our watch list last week, you should have been up, especially on Twitter. Twitter went up $10 last week. So this week I got a few plays for you. I got a few new tools for you to use. And also, we're going to make sure we learn how to make money in the market consistently. All right. So, the first stock that I have is Walgreens. All right. So, we got ticker symbol WBA, also known as Walgreens Boots Alliance. So, it's the same Walgreens that you go to. And I also think this is going to make a nice move this upcoming week. It may not be too big, but we can catch a few dollars in this move. Walgreens, you pretty much move about $1.50 a day. So if we can catch a nice little bounce back on this downtrend that it has had for the last 2 or 3 days, I think we can get to it. So the number one thing that I see is when I'm breaking this down is it was a gap and it has filled that gap on April 1st. So that's positive, right? As well as we look down here at our volume at the bottom, we also notice that our volume is bullish towards the end of the market. So that gives us a positive that we thinking there's going to be a nice little bounce. It has created a nice little consolidation. And now we have a nice support level that it has right now at about 53.86. So if we can push through this white line, which is our 26 daily average, and then we can get parabolic, which is our parabolic stars we see right here. If we can get parabolic and push through our 26-day moving average, we have a slight little gap right here, but I think we can push through and get above about 55 up to 56 before we see any other resistance. But also you have to keep in mind, why would Walgreens want to move up? Why would their stocks be going up? We also notice that the vaccines is on the move, right? So this is something where Walgreens can potentially profit on, all right? So the first stock that I have on my watch list is Walgreens. Pretty much also remember, we're going to always try to have some risk management. So we'll put risk management. Basically, if we can get in this trade on Monday and we catch this trade on the uptrend, all we want to know, like how you usually see, this is our 9-day moving average. And if we can get above that 9-day moving average, that's when I get in. We'll get a little volatile if we can get past this 26. So we get past this 26 and this 9-day moving average, we should be looking good on this play. But if it happens to go wrong, we want to catch our stop loss at this 53, right before this 53 level. So if it drop about 40 cents, 30 cents, we want to catch that. So about 53.40, we want to have our stop loss, but I also think we can start taking profits at 55 to 56, maybe even more based on how much volume we get. So the next stock that I have, which can go hand in hand, is WNT, is also known as Walmart. So we notice Walmart, it has bounced. Well, it looks like it's bouncing off of this 26-day moving average. It's about to go parabolic. So we have a parabolic star here. Also, we can see that we got some bullish volume in that last hour of the market on Friday. But also we can go back and back test, and based on Walmart, how does it react when it bounces off that 26-day moving average? It respects that moving average. So if it breaks below moving average, that will be our stop loss. Remember, we're trying to minimize our risks, minimize our losses. So we'll stop. This will be our stop loss at about 138. So it's just about you gonna give $1 for this player, all right? But besides that, I think it can break this 139 level and make a nice uptrend. Unless pre-market takes all the profits off of it, I think we can catch that uptrend right when the market opens up on Monday if it can stay up. I'm also looking for it to come back down and possibly bounce off of this 26-day moving average again. But I can see Walmart making a nice move upwards. But This is why I really like Walmart, and this is why you break this down and back test everything you do, because I also notice Walmart has a gap. So I love, I normally love these gaps whenever I'm calling out all plays, but we have a nice gap from 143 up to 146. So we can get nice movement upwards, get some nice volume. I think we can go fill this gap within the next week. So if you can get this stock with about 2 weeks at least 2 weeks, possibly even three, I wouldn't even mind saying going to get a 143 call for maybe 3 weeks out. That way you get a little cheaper, you get close to the money. And then if it fills this gap, you can go ahead and take profits at about 145, 146. So we have a potential of a $7 move within the next couple of weeks. Like I said, we see this 26-day moving average is on the up move, and we also see this gap from February 17th that we have may have potentially to go fill in coming time. So we see it's on a gradual uptrend. So we can continue this uptrend for the next couple weeks. This might be something where we can take some big profits off of Walmart. And remember, we want to stay above that 26 moving average. So if you see it ever fall below, and make sure you place this on your chart. This is a great indicator. SMMA 26. This is something you want to add to your charts. This is something that'll help you with those moving averages. So keep that in mind as you're trading. So the next stock that I have for us is ticker symbol VZ, Verizon. So we also look that I would love for Verizon to come down and touch this 200-day moving average. But if it doesn't, I also noticed that it has created a line of support, and our stop loss would be where this 200-day moving average is. Okay, so we have volume, we have bullish towards the end of the day on Friday. We had a great week in the market. We can also notice once again, I see a gap. So if we can get this for at least, I would say I would like 2 weeks on this, but if you can get something for next week, possibly get something a little bit closer to this 26-day moving average crosshairs that we can catch, about a 58.50 call would be good. But if you can get something 2 weeks out, would be fine. Or if you get something for this week, get something that's closer to in the money, so possibly a 57.50 or a 57 call for this week. But I can see this coming up to try to go fill this gap, and is very oversold. So it got oversold, even gap down. So this is something that we want to take advantage of. Take advantage of these gaps for respectable companies, especially if you can see a gap up. And we have this 200-day moving average, so we got potential bounce. So if we break this 200-day moving average, I say this play will be kind of considered dead. But if you got time on it, you can hold it. You can typically find some Verizon contracts for pretty cheap, especially if you find the weeklies. So you catch the weeklies, get something closer to in the money, spend a little bit more, but they usually have good Greeks on them. They don't really have bad deltas on there. So this is something you want to take advantage of. So my next and final stock that I have that I think may potentially have a big move is ticker symbol STZ. Summer's coming around. A lot of people is moving around. A lot of people is traveling. So this right here is, if you know about going out, enjoying barbecues, Coronas, right? Modelo's, all those drinks. This is the company that makes those, okay? We see a huge gap. This is a great big gap. We have a what potentially $8 gap right here. So this is a potential $10 move in the market. So if you catch this move, this potentially can be some big money. I would I would definitely get a little time on this because you can collect pretty well. Um, the Greeks ain't too bad if you get something about 2 weeks out at least. But look at this volume that we noticed that we have on here. We have some great volume on this play. So if we're looking right here, we see all this volume at the bottom, and it's very bullish. We are above our 9-day moving average. We won't, even if you get in this at opening, I believe The lowest that we'll see it go is to about 220, 219. That's where you're gonna lose a little money, but I can see this potentially just jumping and touching this moving average at 228 and probably consolidating here. But if we can break all these moving averages that we see right here, this is going to be a crucial point for this play because we see all these moving averages there, and we can see a potential for this to break above and continue to move up to make a lot of profit on this plate. So I really like this one. I like the volume because we can see the consistency of volume here, right? And also, if you got Trading View, you look at these E's. This E is showing what is our earnings. So the earnings was above expectation. They met and went beyond expectation. So I think they had a little sell off based on earnings. So this is something where you can see that we can bounce back, get all this volume, and come back up. So I think this will be our biggest play for the week. Find something for about 2 weeks out. You probably can get something for a 228 call, 230 call. But we're on the verge of becoming parabolic. So once we go above these parabolic stars, we are parabolic. Once we break this 200-day moving average, we'll become a lot more bullish. So, and this right here with this gap would show that we can go fill this gap within a day, possibly even more. So I would say uh keep you an alert for about the end of this gap right here. That way, once it's filled, you can go ahead and take profits off this play. Okay. So that is our weekly watch list. Go ahead and follow me, tap in, and let's take flight.